have certain behavior. And that's why the finance plus behavior, that will be actually behavioral finance. Now, how you will be investing your money, in which instrument you will be investing your money, what will be the modus operandi of investing your money, or not only investing, financing your money, that depends to a large extent upon the learning of the person. A person who is not aware about the stock market, definitely howsoever money he is having or she is having, definitely that person will not be going to invest in the stock market. A person who is in a rural area, suppose a person who is in Punjab, and Punjab, like he might be driving a Mercedes car, but definitely there are every probability that that person will not be aware about the nitty-gritty of the stock market, and that's and in spite of having huge money at his disposal and agricultural income that is totally tax-free, there is a probability that he will not be going to invest his money in stock or stocks or bonds, and rather he will be happy to buy some tractors and buy some trucks or some extra piece of land for his agricultural purpose. Because why actually that person is behaving like that? And on the other hand, a person who is residing in Gujarat or Mumbai, and he is aware about all the detailed complicated transactions of the stock market, and there is every possibility that if that person is given money, he will be investing his money in some stocks or bonds and company shares. That difference in the behavior is because of the learning, because both the people have different set of learning. Another is the attitude. Just now I told you that there are some people who have very favorable attitude towards borrowed money, and there are some people who do not have very favorable attitude, or rather unfavorable attitude towards the borrowed money. Some people who have very unfavorable attitude towards investment in the stock market, howsoever profitable it is, and some people have not so unfavorable attitude towards investment in the stock market. And so is the case with the bank investment or bank fixed deposit or insurance or postal deposit or any other kind of investment. So that attitude of the person also governs what kind of behavior he will be or she will be demonstrating in his professional life and personal life. Then personality. What exactly is the personality? Personality is the sum total of how a person reacts to a given situation. Now, how a person reacts to a given situation, that defines personality, and this is also applicable in case of making decision with respect to that person's own finance. So that decides the personality of the person. And the perception, what kind of perception that person is having toward different instruments, to different activities, and the learning, attitude, personality and perception, all these things will decide the person's behavior with respect to managing his or her finances. And all these things are collectively called psychology. There are other elements also, but just for the sake of understanding, I have considered only these 3-4 aspects of psychology. So this is psychology. Not only this psychology, the social environment, as I told, I have given the example of a farmer in Punjab and a person residing in Gujarat. Why actually there is a difference in their behavior? It's because of the social environment. A person who is residing in Gujarat, his social environment or her social environment is that every day he or she is just meeting with the people who are either a stock market broker or investing in the stock market or talking about the stock market, and that makes a person familiar with the stock market. And on the other hand, a person who is residing in Punjab, there is every possibility that every second person he will be meeting will be talking about agriculture, the food crops, farm bill which is recently been introduced, passed by the government. Okay, and just go a little north to that Punjab, the people in the Pakistan, they will have some different kind of social environment, and a little further north to this Pakistan, in Afghanistan, you just see the people and you just start giving advice to the people in Afghanistan that you invest in the Reliance equity or this particular equity and it's very profitable. There is a probability that either you will be killed or you will be just kidnapped or you will be just thrown out of the system – because of the situation, the prevailing situation in Afghanistan. So that the social environment that actually governs the behavior of the person, and including this financial behavior. Then the culture, what kind of culture it is. Just for example, from what kind of culture that person belongs to. There is a concept among the Muslims that there are certain things which are considered as haram activity in Islam, like the suwar, sood and sarab. So sood, that is interest. So the interest is considered to be haram. And similarly, tobacco or any alcoholic products, that are also considered to be haram. Haram means these are prohibited. And if you advise some person who is a very true believer in Islam that you invest in a company called State Bank of India, and this is very profitable company, and the immediate response of that person will be that since this company, this State Bank of India or Axis Bank or ICICI Bank, these are actually dealing with interest, and since they are dealing with interest, and interest is considered to be a forbidden activity in Islam, and that's why there is every possibility that that investment will not be made in a banking company. Similarly, alcoholic products are also considered to be haram. So, and that's why if you just advise some person to invest in companies, say for example ITC or United Spirit, which is actually producing alcohol, howsoever profitable it is, but there is every possibility that this company will not be bought by the person who are actually believing in a certain philosophy that belongs to certain culture. So that culture also defines the behavior of the person with respect to the finance. Not only his general behavior, but financial behavior is also governed or dictated by the culture from which culture that person belongs to. And just to cater to the needs of this kind of people only, the government of India in the year 2010, actually they have started thinking from the year 2008 only that there has to be some way so that this vast population, which is almost 20% of the total population of India, that is the Muslim population, they are actually not included into the mainstream financial system, into the stock market, simply because of their faith, because they do not have trust that the company in which they are investing, whether this is Sharia compliant or this is non-Sharia compliant. Now Sharia is nowadays becoming a buzzword that if you just listen to some of the newspapers or read the newspapers or listen to some of the news channels, you'll find a Sharia. Everybody, some people are talking about Sharia, many people are talking about Sharia. Now there is a huge population who do not actually been included into the mainstream financial system or stock market simply because of their faith. And that's why the 11th 5-year plan, they had the mandate and they had the objective of having inclusive growth. So one way of having this inclusive growth was that how, and one challenge of this inclusive growth was how this 20% of the top population who are not investing in the stock market, they can be brought into the mainstream of the stock market. And that's why government of India have started Sharia index. Like you will just search in the internet BSE Sharia index. So BSE 500 or Nifty 500 Sharia index is also there. And what the Sharia index used to do? The Sharia index, they have identified a certain number of stocks, and that has been indexed in that Sharia index. And it is a testimony to all those people who belongs to a particular faith, that you invest in a company which is listed in this particular index, and you need not to worry about your faith. We have taken care of you. We have screened all those stocks which are actually 100% Sharia compliant. So the culture. Then social class. Class also have some impact on the behavior of the people. From which class that person belongs to. Okay, the class may be upper class, lower class, or SC, ST, general, OBC. Different classes are all, and these classes have an impact on our financial behavior. One example just I am giving, like one of my student was doing one project in Assam, and he was doing his project in Nagaland. And one interesting finding of his project that why people from the Nagaland are not so aware about the stock market, and why people from Nagaland are not very much taking interest, or they are not actually investing in the stock market. And one reason is that they do not have demat account. Why they do not have demat account? Simply one can open demat account just visiting any of the terminals. I asked, and he said that, sir, because that for opening demat account you require PAN card, and they do not have PAN card. So why they do not have PAN card? Because they belongs to the Schedule 6 of the Constitution of India. Some of the scheduled tribes in the Constitution of India have been included in Schedule 6, and by virtue of their being included in Schedule 6, they are exempted from income tax. And since they are exempted from income tax, they did not to pay any tax, and since they are not requiring to pay any tax, PAN card is not mandatory. So one kind of privilege which is given to them by the government, that they did not to pay tax, and that's why they are not getting their PAN card prepared. And because they do not have PAN card, in spite of that they want to explore this stock market, but they cannot open. They have to take one extra effort to open demat account. They have to get their PAN card and then demat, which normally people they do not, because we are the people who always wants to maintain the status quo. So if बिना PAN card के काम चल रहा है तो ठीक है, कौन PAN card बनाने जाए. So this social class is also having an impact on the behavior of people, and with respect to our managing finances, and all these things will be studied in sociology. So psychology, then sociology, then history of a person, and the evolution. What kind of evolutionary process we have gone through, that is the anthropology. So anthropology also have an impact on the decision people make with respect to their finance. Not only finance, other decisions also. So that anthropology have an impact. Our history, our evolution, our other like biological features, all these things are studied in anthropology. Then economic system. What kind of economic system we are having? Whether we are having this market economic system, market economy, or we have a command driven economy. We know that there are two types of economic system in the world. Two poles are there. That is market economy, which is popularly known as capitalism, which is led by USA, and there is another economic system that is called command economy, which was actually led by USSR at one point of time, but now it has gone certain changes, and which is popularly known as communism. Though we say that China is a communist country, but now China is one of the biggest attractor of FDI, and most of the private investments are actually coming in China. So actually, in one say that pure command economic system, it does not exist anywhere in the world, but theoretically it exists. So what kind of economic system you have? And in between market economy and command economy, we have adopted mixed economic system, that we will be having public sector as well as private sector, coexistence of both. And the type of investment we are making, the type of decisions we are taking, that depends to a large extent what kind of economic system we have. We are looking at the government for certain investment. We are making certain investment ourselves. This is because we have adopted mixed economic system. Had we adopted command economic system, that is a pure form of communism, then definitely we would have looked at the government for all kind of investment. Okay, one example I'm just giving, that we are having electricity, and that electricity in most of the states, electricity is provided by the government. So that is a public sector, government is providing us electricity. But at the same time, we are having our own inverters, and we have our own generators to generate electricity, or to provide backup whenever that failure, the government fails. So we have made investment in that generator, or we have made investment in that inverter. That we are making investment in that inverter because we have certain economy, we have adopted economic system which is a mixed economic system. Similarly, we have police, that is the government provided. We have our own security guards, that is the private security personnel. we have made investment in that also. So what that economic system, it also defines what kind of investment, what kind of financing and dividend decision or working capital decision will be taking, that economic system also defines. Then economic status, what kind of economic status we have, whether we belongs to the developed country or developing country or some other underdeveloped country, or like there is another category of economic status, that Bhutan, they do not calculate their GDP, rather they calculate gross national happiness. So they have done away with the concept of GDP, gross domestic product, and they have focused completely on this gross national happiness. So what kind of economic status we have? In 1998, now everybody is talking about this world politics and this China and Afghanistan and Russia and America. In 1998, when India had tested its first nuclear bomb, that nuclear explosion was made, and USA have imposed certain sanctions on us. Then that Taliban crisis was there in 99 also. This IC-814 was hijacked, taken back to Kandahar, and India was in a very peculiar situation. And now everybody is everybody is taking, at that time nobody was taking India very seriously. But now India is entering into Pakistan, doing surgical strike, air strikes. Then India is also giving consultancy to Afghanistan. Why these things are happening? This is just because this is not India of 2021, is not of that of 1998. And it is just because of the economic status, economic development we had. In 1998, we have just little more than the $100 billion of foreign reserve, and now we have more than 600 billion, 6 times to that than that of 6 times, 600 million, around $700 billion of foreign reserve, and that economic status is giving us so much power that now the world have started taking us very seriously. So that is actually economics. Then we have our political system. What kind of political system we have adopted, whether it is a multi-party system or single party system, then that of just like of China, or two-party system as that of this UK or USA, or say multi-party that we are having. What kind of political system, whether we should have a presidential form or this democratic form or parliamentary form of government, what kind of political system will be having? And don't think that is the kind of political system we used to have an impact only at the upper level, only at the top level of the country. The kind of political system we have an impact on our life, on our livelihood. We are governed by that political system. We becoming a part of that political system, and actually that political system used to dictate what kind of economic system we have. We have adopted the system of mixed economy because we have adopted a political system, and some person was there in the helm of affairs at that point of time in 1950 who have adopted a particular economic system. In 1950, when Jawaharlal Nehru and then followed by Lal Bahadur Shastri and then Indira Gandhi and Rajiv Gandhi, we were close to USA. Most of our economic policies were left driven. We were close to USSR, not USA, USSR. And now most of our economic policies are actually driven by market driven economy since 1991. Why? Because there was a change in the political system at the center, and that change have impacted our life. So that what kind of political system we have, what kind of accounting system we have, and what kind of accounting system we have, that also is actually governed by what kind of societal system we have. Okay, our sociology is actually defining what kind of accounting policy we should have. I'm just giving one example. I can just give a talk about this accounting system and sociology for hours and hours, but just one example I will be giving, that we used to charge depreciation most of the time primarily on the basis of written down value method of depreciation. And Americans used to charge depreciation based on straight line method. And if you just ask this question, why there is a change in the accounting policy with respect to depreciation in USA and India, you will find that it is because of the culture. What kind of culture? In USA, the moment you are buying some product, one car is being bought, at the time of buying that car, the expiry date is written that this car will have to be scrapped after 5 years or 10 years. And after 5 years, that car will has to be thrown out in certain designated places. Okay, so if a car has been bought for $1 lakh, then and the life of that car is 10 years, then you know that after 10 years this car will have to be thrown out, it has to be scrapped at certain price, and that's why that straight line method depreciation has to be charged on that. But in India, we do not have the concept that even if the car is 20 years old, 30 years old, that car can still be driven, because we have taught to the world that the things can be repaired also. And the things can be repaired, and as the things can be repaired, it will not have a zero price at any point of time. And that's why in the written down value method, the car will not have zero value at any point of time, and it can be continued for substantially longer period, longer number of years, that particular car in the books of account, as well as it can be maintained, that car can physically maintained. So that and why? Because the US have the culture of eat, drink and throw away, use and throw, but we have the culture that that as I told you, that we have taught to the world that the things can be repaired also. So basically this is the written down value method or straight line value method. This is primarily the difference of two cultures, and that is also being reflected in our accounting policies. So is the case with the valuation of stock valuation, that normally used to value based on the FIFO method, first in first out. Americans used to value last in first out region. That actually reflects their social values, social system. So that accounting also have an impact on our life. Then management, what kind of managerial style we'll be having, that have an impact. So all these things are having an impact on the kind of decision that we are making. Not only psychology, it's sociology, anthropology, economics, political science, accounting, management, everything have an impact on our decision we are making with respect to, today we are talking about this finance. So all these things have an impact on our finances, a decision impact on our finances, and all these things are collectively studied in the area called behavioral finance. Now let us revisit all these things. If you have to go for the financing decision, and suppose someone is belonging to a Muslim class, someone is a Muslim, a very true believer of Islam, then definitely he or she will not be going to borrow money because just in consideration of interest, because that interest is haram. That sociology is having an impact. So theoretically you may have some theory with respect to capital structure, you may have some theory related to the valuation of the company, but that sociology is having impact, anthropology is having an impact, economics is having an impact on the decision, whether it is a financing decision or investing decision or dividend decision. All these things are having an impact on the decision people are making, and all these things are studied collectively in behavioral finance. I hope this part is clear up to this. You are clear up to this. Let me know whether I am able to successful in doing that or not. Thank you very much for your patient listening.